This is Roelof Drent, and I'm a realtor with Praxis Realty. And I help people buy homes, and so I'm very fortunate to have with me here Lauren Winsler, because I don't know about anything about credit scores. He is the branch manager of Frost Mortgage Lending and chief homebuyer evangelist. So we all know that credit scores are crucial in buying a home. So when I talk to my buyers, and the thing I ask is, what is your credit score? And usually they'll say, I don't know. So how can we
That's
help
a
them?
great way to introduce it. A lot of times people even put off buying a house because they're fearful that they might have bad credit or they've had some issues in the past. So the most important thing is, if you're considering buying a house or even considering selling and moving and buying a different house, you just need to know what's on your credit report, and you need to get a hold of your credit scores early in the process. So the goal of this talk is to kind of give you those the background and answer some of those questions that you were afraid to ask.
Great.
So what are credit scores? So from a banking perspective, a credit score is a 3-digit number that sums up someone's past history of paying back a loan. This was something that was popularized in mortgage lending about 12, 14 years ago, and became really prevalent in the last decade, which is, relying on that credit score as a way to assess risk quickly to allow companies to make a loan. So if you haven't borrowed a lot of money in the past, not a lot of credit cards, no auto loans and so forth, you may not have much in the way of credit history. If you're someone that has frequently used credit, store cards, credit cards, Visa, MasterCard, auto loans, mortgages, then you likely have a robust credit report. Credit scores range from 350 to 850. So good credit is generally anything over 720, 740 would be top credit. And
So Lauren, so how does a good credit score affect what rate you get at a bank?
That's a great question. So, and we'll talk a little bit about minimum credit scores. So stay tuned later in the presentation.
Good.
But if you're doing a conventional loan or a conventional bank loan, your credit score may impact the rate that's offered. So if you have a 650 credit score, you might be offered a rate that's a half point higher than someone that has a 720 credit score. And similarly, if you have 740, 760, anything that 740, 760 and up generally is the same as if you had an 800 credit score. But
so how does a first-time home buyer find out what their credit score is?
Good question. I mean, the only way to really find out is to have it pulled either by a bank or lender, or to pull it yourself online.
Myself? Oh, that's good to know.
So and we'll talk about this towards the end as well, but you can go on to myfico.com or just have a lender or broker like ourselves pull a residential mortgage credit report, and it'll contain all 3 scores merged together and everything for your current credit history for yourself or yourself and your spouse. And having that information with the credit scores is incredibly valuable. So a little bit a roll-off breakdown of FICO scorings. What we're trying to do is remove some of the mystery here. So I'll talk a little bit about.
I mystified. There we go.
Yeah, it'll take some of the mystery out of it. But I will say that commonly you want to abandon some common sense in some FICO scoring algorithms. But when you start to look at it, it makes more sense. I'll try to make this simple for the for the home buyer to understand what we're really looking at. So 35%, and this is information put out by FICO, by Thayer, Isaac and Company. They said that 35% of your credit score is made up of your payment history. So if you make your payments on time, A third of your good credit and your credit score is because of that. Similarly, 30% is the amount that you owe. And more importantly, the amount that you owe relative to the amount that you can borrow. So it doesn't necessarily know how much income, your credit report doesn't know anything about how much income you make. It knows what your minimum payments are. It knows what the total balance is that you owe across all your credit cards and auto loans and mortgages, and the total amount that you can borrow going forward without opening new credit. So
another thing that people ask a lot is how does it affect your credit score if you inquire about a lender or anything like that? How does that affect it?
Great, yeah, that's a good point. The this section here, the how the types of credit used here, highlight that with the cursor. 10% of your credit report is determined by credit inquiries and so forth. Is that what you were asking about?
I mean, the question about if you ask lenders or other type of creditors about your credit score, I mean, those are inquiries.
Correct. Yeah. So the 10%. It's actually the new credit section. Apologize here. So
okay.
10% of your score is determined by the type of new credit. So if you apply for new credit, it temporarily can ding your score, in the sense that you have new credit without any payment history against that credit. So the next creditor along the line might want to wait until you've established payment history against that. So if you go and apply for a new credit card and you have existing loans unpaid, the score might drop because it's too soon to tell if you're going to transfer the balance over to that new credit card or open up and draw out more money and have more debt owed. But one thing that's true about mortgages and auto loans is that you can rate shop. So if you have your credit pulled by different companies within a 14-day period, it does not lower your credit score. Any mortgage credit inquiry or auto loan inquiry within a 14-day period is counted as one inquiry.
Well, that's good to know.
So if you go to a car dealer over the weekend, and at each car dealer, they pull your credit to find out what kind of financing they can offer you, all those credit inquiries would count as one. Similarly, if you're going to get pre-approved, or if you're accepted into contract to buy a house and you go apply for a loan at 2 or 3 different places to buy your house, those 3 inquiries are counted as one. So you have 14 days to rate shop. So this bullet here, this pie piece here, length of credit history, 15% of your credit score is made up of the credit history, and the most important is the last 24 months. And lastly, this little section here, the 10% types of credit used. It's kind of negative to have lots of store cards generally, and so forth. So the mix-up of your credit report and how it's distributed can impact that. So
okay.
So little common credit problems, and we're going to jump through some of these, but jump in, Rolf, if you have any questions. But if you've got multiple credit cards that are kind of maxed out and used to their limit, you're showing that you don't really know how to use that credit, and we want to pay some of those down before we open up new lines of credit or new mortgages.
Okay, so how about judgments?
Yeah, judgments are a great point. If you're applying to buy a house, you really can't buy a house until a judgment is paid. A judgment can be placed against the house immediately after you buy the house, and it would take precedence over the mortgage. So title insurance companies are providing title insurance, and they won't insure when judgments exist.
Now, I also help people sell their houses through short sales. So then the question I always get asked is, how long do I have to wait after a short sale before I can buy a new house again?
Correct. Yeah, with FHA government financing right now, it's 3 years from the finalization of the short sale. There are some exceptions to that if you're moving because of a job and the mortgage on the short sale was paid up in full all the way up until the short sale. It's possible to buy immediately after the short sale without waiting 3 years, but it's important that mortgage is paid on time. There's other exceptions related to household changes and so forth. But
so how about the bankruptcy or foreclosure?
Great, yeah. On a conventional FHA loan, a bankruptcy requires you to wait 2 years after the discharge of the bankruptcy. But it's important during that 2 years to really rebuild credit. A lot of times people don't go out and get a secured credit card right away. We need to reestablish some payment history to get the credit scores back up. Foreclosure, similarly, is 3 years with government FHA financing, and can be as long as 7 years. There's kind of a sliding scale between 2 and 3 and 7 years. So if you've got a specific scenario on that type of area, what I would do is kind of ask that question. Let's review your situation and find out how to set you on a plan to where you can buy sooner rather than reaching the 2 or 3 years and then having to wait to rebuild credit. But
so if I have questions about buying a house and about when to get a loan, can people come to you and ask you those questions?
Absolutely, that's what we're here for.
Okay.
And similarly, finding property yourself. So the worst type of foreclosure right now is what's considered a strategic default. Just to put the cap on that question. So if a home buyer had homeowner had no extenuating circumstances when they had a foreclosure, they can be made to wait for 7 years after that. A strategic default is when the home buyer can't prove that they had a hardship when they went into foreclosure. They just stopped paying because they were upside down and they made a strategic investment decision on their occupant, on their primary home. So
yeah. How does credit counseling come into play with all this?
Sure. Credit counseling can often be viewed as a Chapter 13 for bankruptcy. So a lot of times, if you're in credit counseling, it's going to be difficult to get a conventional loan during that process, and a conventional underwriter may want us to be 2 years out from the closure of the credit counseling because they look at it as a debt restructuring or a Chapter 13. Whereas a Chapter 7 is where you wipe the slate clean. FHA government lending is a little more lenient if you've got good credit scores and you're in credit counseling, as long as the credit counseling company writes a letter and approves of you buying a home. You can buy while you're in credit counseling with FHA.
Okay.
Charge-offs and collections, roll-off of the collections are a great topic, and maybe a topic for a little short video update. FHA recently changed their collections policy, although they've delayed it till July now, where if you have accumulated collections exceeding $1,000, those need to be resolved before the loan can close. So if you've got some collections or concerns about collections and you're looking at FHA financing, it's a priority number one to find out what's on your credit report right away and deal with it before you get into a situation where you found a home that you just absolutely want to buy. So, 79% of credit reports contain errors, according to a study done several years ago. They looked at a lot of credit reports and they determined that that a lot of the reports had errors. That things were just mistakes or incorrect reporting. So if you're looking to get pre-approved, in advance of that or in the process of getting approved, have me or another lender or even pull your credit report online. So about a quarter of the time, roll-off, it's amazing that you can actually have a mistake that's serious enough to either raise your interest rate or straight up deny you for that loan.
I didn't realize that there were so many mistakes in credit reports.
Well, if you think about it, you got all these banks and lenders just reporting semi-random information over time. It's understandable how mistakes can happen, but when it's your credit report, when it's your credit history, and you find something that's wrong in there, it's just maddening to have stale information.
So how about if you have some bad things on your credit? Is a credit repair and something that can help
I've
you?
got that down here in italics. Don't pay a company for credit repair. Everything is something that you can do yourself by disputing those errors with the 3 bureaus, resolving collections by pursuing deletions. Don't pay collections. Talk to a mortgage lender that knows how to read credit before. Talk to myself, obviously, before you pay a collection, because you want to pay collections and pursue deletions of those collections. Or if you have a delinquent trade line, pay the trade line or negotiate a payment plan on that trade line. Oftentimes doing that will raise your credit score, but paying collections can lower your credit score because it creates a new activity on a negative or derogatory item.
Wow, I didn't know there were so many things affecting your credit. It's very important to talk to somebody who knows about this before you do stuff.
One of the things, I guess, 2 most common myths, right? That's not the title of this slide, but let's throw out a couple myths. Paying off collections raises your score. That's not true. It actually can lower your score, as well as closing accounts. So if you have credit cards and store cards, you get them down to 0. Do not close them. If you close them, it takes the credit available out of that ratio. That 30% of your score is based on your total credit used. So you're going to negatively impact your credit by closing an active account that's paid down to 0. So those 2 things, if you take away 2 things from this entire presentation, is don't pay off collections without talking to somebody that knows how to read your report. And secondly, don't close any accounts because you're removing positive history. So,
that's amazing. So, if my credit score does not qualify me today, what can I do?
What can you do? Well, the first thing you can do is pay your bills on time and wait. Okay, but if you don't want to wait, or if you don't have credit scores, if you don't have credit scores, here's the kind of the formula or the plan that we give a first-time home buyer that comes to us that doesn't have credit right now.
Okay.
Either they're young or they're just maybe off the grid, if you will, from a bank's perspective. And that is to make sure you've got a checking and savings account and that you're looking at possibly paying bills electronically. And either pushing the money to the creditor via your own checking bill pay, or having the creditor auto debit the money from pulling it from your checking or savings account. Just be careful that when you set it up that you look at the dates of when you get paid and when the money comes in and when the money goes out. What this is doing is helping you not to miss a payment, because people with good credit will often be victims of a little bit of sloppiness because they were mailing checks too late and they didn't arrive in time, and they got a 30-day late as a result. If you don't have a lot of credit, you can, and you're denied credit, you can use a collateralized loan with a bank or credit union, or get a credit card that's called a secured credit card. Maybe get a $300 credit card and just kind of use it for gas and then pay it off right away. You can apply for a loan as an authorized user or a cosigner. Now, this is going to be something that down the road won't be allowed in mortgage credit to be on, say, dad's credit card and so forth. But it's something that might assist you in opening up other credit cards, and then you can take yourself off the authorized account before you go to apply for a mortgage.
Oh, I didn't know there were so many things you could do.
Yeah, there's a lot of things that you can do to build your credit. The secured credit card is probably the easiest one. You deposit $300 with the bank and get a credit card assigned to that. You know, some of the brands that our clients and customers use, Capital One has some secured credit card products, First Premier as well, and then some, locally Some of the credit unions, U.S. Bank, Redwood Credit Union, a lot of them have secured credit cards. You just have to ask for them. There's a concept of non-traditional credit, and that's something that when we're applying for a mortgage, we may ask you to document your payment of your cell phone bill, your PG&E, your power and electric bill, your cable bill, and so forth. So what I'll say is that if you're looking at buying a house, if you pay a lot of these bills, including your rent, for instance, in cash, or what you want to start doing is start to think about, if you don't have a lot of credit, start paying that in a way that can be documented and saving those receipts. So if you're paying things in cash at the cell phone store, for instance, walking into AT&T or Verizon, paying your cell phone bill in cash, and they give you a receipt, save that receipt. Or if you have the ability to switch over and start paying with a check so that you can save those canceled checks. All those little things add up. When we come to you and say, okay, you don't have enough credit, we need to document non-traditional credit, and we can't do it, it's frustrating for everybody. So
now, what if I'm sitting in front of my computer today and I want to do one thing to improve my credit? What is that one thing that I should do?
One thing to improve your scores today, I would have to say, if you don't have your credit report, or if you haven't looked at your credit report, that is to just get your free annual credit reports and take a look at the trade lines.
Okay.
And see if there's anything that shouldn't be on there. That's probably the best one thing that you can do. Don't sign up for any kind of credit monitoring that you pay monthly, or credit reports that pay monthly and so forth. That you don't typically need that. Going on annualcreditreport.com and pulling your credit reports is probably the one thing that you can do. Now, that doesn't improve your scores, Roelof, right? But it's I guess it's a little bit too complicated. The only thing that guarantees improving your score without doing anything is just paying your bills on time and having a positive payment history. But I think the one thing for a home buyer is to get your credit report online, or just, if you want to get the scores, get online with me, and I'll pull a credit report for you at no cost.
Right.
So, all right, we're going to try to wrap this up at 25 minutes, but minimum credit scores for different loan programs. We're going to rattle through these. Some of these might change by the time viewers looking at this. So we're recording this just to timestamp it in the spring of 2012. But right now, most FHA lenders require a 640 credit score to apply for maximum financing at 3.5% down. Conventional loans have a minimum credit score of 620. Their rate will be quite a bit higher at 620 versus 700 plus credit score. If you're looking to use a conventional loan, not FHA with 5% down, we'll need a minimum of 680. Most VA, veterans, and USDA 100% financing require a 640 credit score. There are some opportunities at 620. HomePath, Fannie Mae bank-owned properties will require a 660 credit score to use the special HomePath financing. And we do offer FHA financing all the way down to 580 at 3.5% down with our proprietary FHA Choice product.
Wow.
And below 580, 500 to 579, if you put a full 10% down and meet all the other guidelines, you can qualify for FHA financing with a lower credit score.
Now, what if I'm just below these thresholds and I'm trying to get pre-approved? What can I do then?
Correct. Well, you can do what we call rapid rescoring or credit rescoring, where we adjust the balances on your credit report, dispute items in a quick fashion by using a rapid rescore technique. And this can, in 48 hours, raise your credit score. It's quite remarkable,
yeah.
And it's something that when we're seeking a pre-approval or a mortgage credit approval, to actually close on a house, we'll be looking to do credit rescores to raise your. Now, this is not credit repair. What we're doing is just making short-term changes to your report, and it takes advantage of the fact that your credit score is calculated automatically anytime your credit report is pulled. So if we can manipulate the trade lines to correct errors like balances, let's say you paid off a credit card and we show that as paid to zero, your credit score may jump as a result of that pay down. So there's a lot that can be done. So if you're denied financing and you're just below these thresholds, let's talk. We can probably do a rapid rescore.
So now, what is the cheapest way to find out my credit score?
Cheapest way is call me at Frost Mortgage, and we'll pay the fees for you to get your report. So,
oh, really?
You can get a free report, as we were talking about, at annualcreditreport.com. I'll show you what that website looks like really quick here.
Does it have the scores too?
That does not have the scores. This is what the website looks like at annualcreditreport.com. But it gives you the trade lines. The report that we'll give you will have all three scores and a consumer version of the credit report that'll have the numbers of your creditors attached. And the last thing that we can offer, if you've got something where we can't rapid rescore to get you qualified, we do offer a free credit monitoring service that notifies us when a credit score crosses 640. So if you're interested in that, and it's set up right now at 640, which is the benchmark for most FHA financing and most VA and USDA loans. So it's a great resource. Uses soft inquiry, soft credit monitoring, and it's something that we offer at Frost Mortgage for free. So it's something to inquire, to set up. So how to, there's my contact information. It's easy. You can reach me directly at 707-331-1414. And the toll-free numbers are listed on the website at frostnorthbay.com. Or just Lauren_Winsler at frostnorthbay.com. And if you're interested in getting a free credit report or getting set up on credit monitoring, easiest thing to do is shoot me an email. I'll give you a call.
Well, that's great. I really appreciate having you here with me, Lauren, because I didn't know much about credit, and we learned a lot, but there's a lot more to be learned, and obviously people can contact you to find out more. So thanks a lot.
Thanks, Roloff. Talk to you soon.
Okay.